Hello, everyone. Say anything to anybody?
Hello.
The way the markets are at, something big is coming. I've been saying this, something big is coming. And it might be this debt crisis that triggers this. Something's going to trigger it. And it could be a black swan. And if it's a black swan, then there's no way to know. It could be the war in Russia. It could be something with China. It could be another bank meltdown, or it could be this debt crisis. Something big is going to happen. Who knows? Maybe there's another terrorist thing going on. You just never know.
Absolutely.
But the way the markets are behaving, something big's coming down, in my opinion. Just in my opinion. And
Well, it sort of
and
feels that way.
and so I think that it wouldn't be a bad idea if you are somebody who has Apple shares, because Apple's at the top. Even if you have Tesla, let's say you have Tesla,
Yeah.
okay? Tesla closed at 167.98. I think a year from now, people are going to wish, maybe six months from now, people are going to wish they had a chance at 167.98 to get out of Tesla. I know everybody's excited because Elon just announced a woman to take over for Twitter,
Yep.
and they think that his full attention will be back onto Tesla, and they think that Tesla has taken a dive because Elon hasn't been paying attention. I'm not saying that's a 0%, but let's face it, there's a lot more competition in the marketplace now, quality competition now than there was a year ago.
So if you look at the max chart on Tesla, it's essentially a big ass head and shoulder, and it has double
Dan's
top.
favorite pattern.
Yep. On it topped out on February 13th at 208, as well as March 27th at around 208. That's your double top. And it formed an M pattern, as in the letter M. And it absolutely could fall to as low as 110.
Yeah, an M pattern is bad.
It's a double top, is what that is, guys. It means it's hitting the ceiling twice. It made two attempts. It's like a rubber ball that bounced back down.
If you go to the 2-year view and you put just a simple trend line on it, the
Yeah.
trend line is down. November 2001, Tesla was $415. Today, it's at 167. So if somebody who owned it at 415, they were listening to the Kathy Wood saying it's going to $5,000, and they weren't
Yeah.
hedging themselves.
Yeah.
If somebody at $400, I, even at $167, if you go out to June and you just take a $160 covered call on Tesla, the market will pay you $1,500 per contract just for going out 1 month. So if the market is trending down, a year ago, at this time a year ago, Tesla was approximately $220, 221.
Wow.
So if you bought a year ago, you're down $60. This is the problem with being part of a Tesla army or an Apple army, is if you own something, you can't be so blind to think that it's going to the moon. All I got to do is just hold, because that works. I mean, it's worked over the last few years, but going forward, is that going to continue to work, Dan? We don't know. But
There's
as I do this,
yeah.
as I do this more, and as I learn these lessons, I can tell you right now, if I bought something a year ago and it drops 20% or 50%, that sucks.
And that's the point. These markets are so more volatile these days. I think, I don't know. I mean, you have to rethink the buy and hold. I mean, the days of buy and hold, by and large, our parents' days, for whatever reason, a lot of reasons actually, you could do that, and you knew long term probably going to be all right. But the way things violently swing now since 2008, because of quantitative easing and everything else, going up and down with the money supply like a ping pong ball, and interest rates and etc., the value of the dollar, all of that ultimately affects the market. And you've got more of this, more than ever before, in violent swings, whipsaws, straight up, straight down. That wasn't even commonplace, I think, 5 years ago. It is now. You could get crushed. I mean, you buy 100 shares, like Dave said, and all of a sudden you pay $100 for them, and in 2 months they're down to $60 now. You're like,
I know people who were telling me, you can't lose in this stock. You can't lose in this stock. And this was a year ago, like Invitae and SoFi and Tesla and Square
yeah,
and PayPal.
yeah. The
Like,
minute they say you can't
they're
lose,
solid companies. Or look at the banks.
I get
People
nervous.
just 2 months ago were saying invest in the banks. They're the most guaranteed, safest place to go in this crazy times. Boy, were they wrong.
Great point.
The whole point is when you buy something, I'm always, me personally, I am always selling covered calls on the stuff I own if I can. I mean, if it's paying a penny, then what's the point? Because, and I lose a lot of shares. Like I just sold Wheaton Precious Metals. I put a covered call on it, and I looked at the chart and I said, I'd be happy selling it at this price. I think it was $48, and Wheaton was at like 38, I think, when I put the covered call on. And it within a month, it went up to 52, and I lost those shares. And we talked about why that moved up faster last week, so people can watch that video. You're making guesstimates on where you think things are going to go. I made money, so I'm not upset that I lost the shares because I made money. And then what I'm doing is I'm waiting for Wheaton now to drop back. And if I want, I will sell a put, or I will buy an option, a call option, to get back into that opportunity. The days of passive investing, my friends, those are gone.
I think so.
You can't trust anybody now with your money. No one. Only you. It's like physical gold and silver. And I keep telling Dan this. If you have somebody else storing your physical gold, don't be surprised if somebody else takes it. Oh, but I'll sue them. Good luck with that.
Yeah, good luck. Yeah. No, I no argument.
They're in Ecuador now with your gold.
Yeah, I can't debate that. There was a time maybe I would have debated it a few years ago, but the way things are now, that's a distinct
fiduciary responsibility.
it's a distinct possibility. Distinct possibility. Yeah.
People just today, they're like, I got to get mine. They're not worried about you. Just look at our politicians, who are some of the best traders on earth.
Yeah, no, absolutely. And Nancy Pelosi is an options expert. She knows when to go long and when to short.
Yeah.
She
learned from Hillary.
She had time to learn all that when she was in office.
All three indices are going to be down at least 10%. Say 1 month from now. 1 month from now, I think all three of them will be down 10% or more. Okay, you want specific idea? I think the home builders, in my opinion, this isn't obviously financial. It's
I'll
what
add
I'm
this
doing.
to the document.
I think that the home builders, I think that you can buy puts on those right now and go out to November or January, and I think you will make money. I think that's probably one of the less risky trades. Now, those people who have to move, who have to buy, they don't have a choice in many ways. But in many areas now, in just 1 year, like last year when rents were soaring, it was cheaper to buy, as you know, Dan. But now it's cheaper to rent. So if you can lock in a 3-year lease with somebody, it probably is not a bad idea, because within 2 years or 3 years, home prices are probably going to be 50% in some areas what they are now. And I know these are extreme numbers. And if you want why, I've been saying it for the last month since we've been doing these. My thesis is everything has been inflated over the last several years. Significant. I mean, it's been inflated for 15 years, but especially since 2020, everything has been blown up. So housing, in my mind, is coming back minimum 25%. back to 2019 levels, at the very least. I think it's going to continue further because if you look at all the different stocks, more and more stocks, Dan, when we go through the tickers, more and more of them are going back to pre-pandemic levels. So if you want a specific trade idea, I'm already in that trade. Yeah, but it's a trade where you can still get into it. There's the home builders, they have ETFs, but if you want specific home builders, there's DHI, there's KB Homes, there's Lennar, there's Builder. I think there are a couple others. But I think all of those, if you look at them, they're all at inflated levels right now. And if you read their reports, Builder just came out with their financial report. Their revenues and their profits are down.
That seems to make sense.
So this is where we're talking about where the puck's going. In my opinion, the puck is this. Because people, unless they have to, are not going to get a 7% mortgage.
They won't. Yeah, a lot of people won't be able to afford it. Yeah.
All these home builders who have inventory, they're probably going to say, it's cheaper for us to take $100,000 off, and maybe they'll even finance the things themselves, saying, hey, Mr. and Mrs. Homeowner, we'll give you 3% for a certain percentage. They can't do that on everything, but they can take a certain percentage of their inventory and do that. Tech, I think the QQQs, I think it's a great short right now, in my opinion. I think that's going to roll over hard because, as I alluded to before, the SPY and the IWM have already shown some weakness. The Qs haven't rolled over yet. That's more speculative. I think that's worth a trade.
So, the government has its big interest payment coming up Monday, and then June 1st is the U.S. Congress or government.
Maybe that's the catalyst we were waiting for. Maybe that will scare market. If there's a bank failure over the weekend and then the government has to pay this giant number that keeps, and then people start saying, yeah, this time next quarter, the number's going to be even higher.